shareholders by ESRV is as high and is as good as it can get. Now, in my open letter, we have just sent this week to the CEO as well as the management of ARA Logistics. This is exactly what I say, and these are the points I'd like to share with you in this video. In today's video, we are going to talk why the ESR offer price of 97 cents for ARA Logos Logistics is a good price and as high as it can ever get. Now, you notice that essentially, in a run-up towards the voting, there are some critics on the issue. This actually, again, according to the Business Times report, they actually cited some of the proxy advisors. They have a problem with the process as well as the pricing. Now, I think you have heard from the ESR, both ESR as well as ARA Logos Logistics REIT managers as well as the CEOs. They explained why the process was in line with any negative process. Now, in today's video, I'm going to talk about why the pricing at 97 cents, which is revised up from 95 cents, is as good as it can get. Now, in my open letter to the ARA Logos management and the CEO, for whom I actually encouraged them to publish my open letter to all shareholders going into the vote, I actually advocate a few things. One is that in terms of basically looking at REITs, one should be looking at return on invested capital. Now, ladies and gentlemen, return on invested capital measures the formula is this, that is actually you take the operating profit generated by the REITs over the equity structure, over the loan structure, over the lease liabilities, less of the cash. Now, in all textbooks, ladies and gentlemen, and the GCP Global will be teaching for the last 33 years, we actually look at ROIC as a big driver of valuation. And guess what? Who agrees with us? None other than Warren Buffett from Berkshire Hathaway, right? Where we believe that ROIC is a big driver of valuation, as higher returns on capital means additional cash flow for shareholders, to actually invest, all right? So as we look further, ladies and gentlemen, the next barometer is return on equity, which is simply net profit divided by equity. So it is actually a good gauge of a REIT's profitability and how efficient it is in generating profit. So let's look at ALOC, 4-year ROIC and return on equity. What happens? So from 2018, 2019, 2020, and to the latest results for ALOC, this is what we have. The return on invested capital, ladies and gentlemen, actually was at 6.14%. Then it went down in 2019. Then it went up again slightly into 2020, and 2021 it went down to 6%. Now, bear in mind, ladies and gentlemen, this was a year in which the new management of ALOC, led by Ms. Karen Levy, actually went on to invest very big in Australia. Now, to what extent has this actually translated into the numbers? This is what you see both in the impact on the ROIC and return on equity for ALOC. Right. Now, what does it tell us, therefore, ladies and gentlemen, for ALOC shareholders? You notice that the drop, to below is the first time in 4 years for ALOC where the ROIC failed to achieve a 6% level. Now, ladies and gentlemen, you can see that 2021 would have incorporated ALOC's largest Australian acquisition, and I leave it to you to decide, whether that acquisition has actually helped, in the betterment of its operating numbers, as enumerated by both the ROE as well as the ROIC. Now, it also implicitly means that going forward, therefore, doesn't mean for shareholders of ALOC, you have to ask yourself, especially with the latest developments, the latest valuations of all their property assets in Australia, value at less than 6%, can ALOC continue to deliver ROIC of above 6% for you, the shareholder? Okay, so you can see, ladies and gentlemen, that ALOC ROE also did increase, to 8%, but that was in 2020. Now, in the analysis of studying S-REITs in the last 20-year history, as well as when we first started on REITs, 70 years data from the US, 40 years data from Australia, this is very rare that REITs, because they hold a high element of asset and therefore comes with high gearing. It means that essentially an ROE of 8% is as high you can get, and ALOC probably have seen that in 2020. Okay, so not surprisingly, therefore, ROE has actually fallen, but to what extent it is reflective of the placement that was done to finance the acquisition of a large Australian assets that can be seen. Now, my ladies and gentlemen, as savvy REIT investors, the key thing to bear in mind is to be buying the REIT. Yes, REITs essentially may have to undertake acquisitions to finance growth. Okay, but it does not necessarily mean that all growth financed by private placement or gearing essentially is beneficial or help in enhancing shareholder return. So of course, at GCP Global web classes, as well as actually in all our classes, will help us distinguish for you whether acquisitions by REITs actually help to enhance shareholders' returns. Okay, now let's move on to the next concept in my lecture through the management of ARA Lock, for whom I actually hope they will help to publish, is the fact that the enterprise value. Now, and the enterprise value, ladies and gentlemen, is none other than the market cap of the REIT plus the liabilities, that is actually the debt obligations, both short-term and long-term, minus of the cash, because it actually helps you to determine what is the most fundamental metric used in business valuation, in financial analysis, in risk analysis, and most importantly, for M&A. Across all sectors, across the history of the Dow Jones since 1896, most major M&As, we talk about enterprise value on EBITDA, because that actually helps you to gauge whether a firm or a REIT is overpaying or underpaying a stock. And I urge you, ladies and gentlemen, to be looking at this metric for the ARA Logos merger before you actually vote. So moving on, ladies and gentlemen, so the denominator to be used is actually the EBITDA, right? The EBITDA is the earnings before interest and taxes and amortization. And as you know, ladies and gentlemen, many of us invest in REITs because REITs don't pay taxes as long as they meet the 90% rule of distribution of more than 90%. And this means, therefore, essentially a high element of EBITDA is an add back of the net profit to the taxes, rather to the interest and the amortization, right? And guess what, ladies and gentlemen, EBITDA is a good measure of the REIT's profitability. It helps for comparative analysis. So this means, therefore, it boils down to the best metric to use for valuation, especially for M&As, is EV, or enterprise value divided by EBITDA. Right? So essentially, this metric helps you to compare the entire value of the REIT with the EBITDA or its earnings power. It tells you essentially whether the asset allocation by the manager or by the REIT is actually bearing fruition for the shareholder. Right? It is probably the best measurement for M&A situation, and as well as actually for this current ESR proposed and ALOC proposed merger. Now, of course, EV/EBITDA is also a preferred measurement for other measurements, like to what multiple a REIT is trading at, which is what we study and use closely in our classes at GCP Global. Determination and valuation multiple REITs, okay, across geographies and across industries. To calculate the terminal value in DCF analysis and to calculate the target price of the REIT. So you'll know when it is actually cheap, when is it expensive. So in all, therefore, let's look at the EV/EBITDA of ALOC. So if you actually complete all this, right? So if you add back the operating profit, to the interest expenses, and if we move on, ladies and gentlemen, You can see that there's amortization. This is how the EV/EBITDA for A-Log works out to be. So as it is, you can see that since 2018, right, the EV/EBITDA has gone up from 16.9 to 18.2 to 14.6, just before the huge acquisition in Australia. And then last year was a good year for A-Log, where the share price went up from 60 cents to 90 cents, and this pushed up the EV/EBITDA to a very high of 24.18 times. This also begs the question that 24.18 times, can it ever be realized again for shareholders of A-Log? Okay, so now based on the revised or offer terms of 97 cents by ESR, you can see that if you work out the EV/EBITDA, ladies and gentlemen, based on 97 cents, you are arriving at a very high 25.26 times. Let me reiterate, ladies and gentlemen, that this is a high of 25.26 times. Now, ARA shareholders that have seen the listing of ARA REIT since it was listed about 11, 12 years ago have never seen this valuation before. So this valuation is actually, as I've mentioned in my write-up, in my submission to the manager of the ARA Logistics, that this measurement is something that is historically high, it's never been seen before, and I doubt it will ever be seen again. Okay, so my observation, ladies and gentlemen, is that based on the price of 97 cents, ARA or A-Log EV/EBITDA had a quantum leap of more than 60% last year. Okay, right, compared to 2020, because the share price went from 60 cents to 50 cents. Now, EV/EBITDA surged from 14 then, okay, to an astonishing 24.18 times. This was actually the end of 2021. Now, despite this, and despite the war in Ukraine and with Russia, you can see that essentially you are experiencing a very high EV/EBITDA, 24.5 times, 26 times implied by the acquisition or the proposed merger with ESR. Right now, in the course of looking at REITs for many years, in this case more than 60 years later in the US and 20 years later in S-REITs, you can see that hardly any S-REITs have experienced such a quantum leap of valuation. In this case, more than 50% in a short period of time. In this case, less than 1 year. So if you are an A-Log shareholder going to vote on 21st March, the first thing you ask is that, will such high valuations be sustainable going forward? Will my shares be able to ever fetch this high valuations again? In the first place, at 25.26 times offered by ESR, it is a never achieved but very high valuation. Okay, hence the theme of my proposal, that is actually the price that we are getting is as high as ever that we can get. Now, in the history of S-REIT 20-year history, okay, there have been periods of time where REITs have done well. This was in 2013, 2015, 2017, and 2019. You notice that REITs have generally outperformed equities, and that's why we are firm believer of REITs. That's why I've been teaching REITs for already 33 years. And you can see that the times in which actually the REITs spend above EV/EBITDA 20 times, not only just for A-Log, but the rest of the S-REITs market were actually fleeting, short, and few and far in between. So bear this in mind if you are not going to accept the offer, because the valuations you are seeing at this sky-high valuation is probably not going to last. Okay. Now, again, ladies and gentlemen, we are here to give you a historical perspective of how prices reacted and the underlying valuations. We're not here to give you any advice, but based on historical performance, if it's been repeated, we reckon, that the historical performance is exactly what the past actually told us and indicated. So when you go in and make a vote, this is something that you want to value. And of course, this is not financial advice, it's just pure education sharing, because at GCP Global, we believe that for the interest of development of the S-REIT market, it is important that shareholders, make informed decisions rather than gesticulation to what the media highlights based on certain aspects of things being brought up to a merger. I would say that most of this are valid, but it's important that when you go into a merger, you fully incorporate all the key information, especially with regards to valuation, because for a shareholder, you will notice that you want to get as high a price than you can ever get. And if this is already as high a price that you can ever get, then what should you not be doing then other than going and cast your vote for the merger? Okay, now, so ladies and gentlemen, just to round up, the EV/EBITDA multiple of 24.18 times, which we saw at the end of last year, is the highest that ALOC has ever achieved in its 12-year history, listing on the SGX. But then again, you may say, hey, Mr. Yap, hang on. During the bull market on the 2013, didn't actually ALOC actually went up to above $1.30? Yes, it did. On 17th of May, to be exact, this is the share price. You can see it actually went up, for 2 weeks, because you can see, rather 2 months. This is a monthly chart from Yahoo, and you can see, ladies and gentlemen, okay, that for 2 weeks it stayed at about 120, 130, and then after that it suffered a huge 80% fall for the next 1, 2, 3, 4, 5, 6, 7 years before it started to move up. Okay, so that's very ironical, because why, ladies and gentlemen? First, since its listing, it has never hit that high. When it hit that high, it only lasted for about 2 months for ALOC share price. And then for the next 7 years, it's come down by more than 60–70%. And now that the share price has gone up again, I'm just quite curious and surprised that most shareholders have been told that essentially they are not getting a good price by ARA based on the merger share price of 97 cents, which is quite interesting, because the historical perspective of the price behavior seems to indicate otherwise. Okay, so essentially, you can see, ladies and gentlemen, that if we look at the EV/EBITDA on that day, so according to Yahoo Finance, okay, the highest price that ARA has ever achieved since its 12-year listing history was on 17th of May. And what was the price then? It was 1.3818 to be exact. Okay, now this corresponds with a EV/EBITDA of 22.8 times. Now, mind you, ladies and gentlemen, 22.8 times is still far below the price of 25.26 times that you're going to get based on the proposed ESR payment at 97 cents for the merger. Okay, so I think you don't need to be very smart person to know that you're getting a very, very good price. So in conclusion, ladies and gentlemen, in my submission to the board of ALOC, as well as the CEO, Ms. Karen Lee, I've mentioned that my analysis clearly shows that ALOC shareholders are being offered the best probable deal, right? It is worth reiterating that this higher but never EV/EBITDA of 25.26 times, has never been achieved by ALOC in its trading history. It is only in the offer price of 97 cents. That's why you are even getting it at a higher value. Now, so therefore, ladies and gentlemen, this forms my conclusion why ESR offer price of 97 cents is as good and as high a price that ARA logos shareholders can get. Of course, ladies and gentlemen, once again, this is not investment advice, but I think it's important to know what has the past indicated for the last 12–13 years history of ALOC, what it means in terms of valuation, so you vote wisely. Now, of course, many of the shareholders, ladies and gentlemen, would like to wait and wait, and they think that they get a better price. But really, when it comes to investment, there's a very high element of opportunity cost, or what we call reinvestment risk. And if I may, to end up, what Leo Tolstoy, one of the philosophers that I read in War and Peace, what he says is that the two most important warriors of our life is patience and time. Tell it to the Ukrainians, ladies and gentlemen, when my heart actually goes out to them. if I may paraphrase it, I just want to tell you, or ask you to reflect that, if you do a deep introspection and ask yourself, even with patience, will my share price, if you're an A-Log shareholder, ever rise to EBITDA multiple of 25 and 26? Now, if it does, how long do you need to wait? Another 10 more years? Or if it doesn't, then it is maybe lost time while waiting for it. So if that's the case, therefore, then you should be casting your vote for the merger of the 21st of March. So once again, ladies and gentlemen, hope you enjoyed today's video, and next week we look forward to giving you something exciting. Ladies and gentlemen, I hope you found this very educational, very useful in perspective, as well as to know where you're actually casting your vote. At GCP Global, you notice that we take our heart from 33 years of experience as a true educator to present to you, the most important facets, of REIT valuations, REIT understanding, REITs mergers, as well as basically how to size up REITs, as well as actually technology stocks. For those of you who enjoyed our classes and videos, and would love to learn more from our classes, because we actually do mint quite a couple of millionaires investing in REITs as well as technology. Our next class is on 19th of March, which you can sign up here. And our next REITs class is actually only next quarter, because as it is in the last 3 years, we have been holding REITs classes on a quarterly basis. So if you feel that we are as good in educating you and helping you to enhance and multiply your wealth, do sign up for next class way back in the second quarter of next year. And once again, go in and vote wisely on the 21st of March. I hope you enjoyed today's video, and smash and subscribe to our YouTube channel, where we give you and dish out very good analysis programs, which I'm sure you will agree, and hope the shareholders of the management of ARE Logos do the correct thing. Cheers.